What happens to stocks when bonds go up? Welcome to this YouTube video where we reveal a proven and back-tested strategy that's based on the fascinating relationship between bonds and stocks. You'll discover the impact of bond market fluctuations on stock investments and how you can benefit from it. But before we delve into the nitty-gritty of this approach, let's understand why keeping a close eye on the bond market is crucial for every stock investor out there. Financial theory highlights the importance of bonds because interest rates directly impact the value of stocks. When interest rates are low, investors are incentivized to invest in riskier assets like stocks since they receive higher returns for taking on that risk. However, as interest rates rise, the appeal of riskier assets like stocks, gold, and Bitcoin declines. Now let's take a closer look at bonds. A bond pays a fixed coupon annually until it matures, meaning that a bond with a 5% coupon will pay 5% each year until its maturity date, which could be as long as 20 years or more. However, during the bond's lifetime, interest rates fluctuate significantly. If interest rates increase, the bond's fixed coupon becomes less attractive, causing its price to decrease to reflect the increased rates. As a result, there exists an inverse relationship between stocks and interest rates. It's important to note that stocks are generally considered riskier than bonds because bondholders receive their money back before equity holders in the event of a company's bankruptcy. Therefore, bonds are perceived as less risky than stocks. Our hypothesis is that a rising bond market is beneficial for stocks since interest rates decrease, making stocks more attractive. Are we correct? Let's find out. Let's backtest what happens to stocks when bonds go up. We are long stocks, SPY, when bonds, TLT, are above the end-day moving average, and we sell when it's below the end-day moving average. For example, when TLT crosses above its 15-day moving average, we buy SPY at the close. When the close of TLT crosses below its 15-day moving average, we sell SPY and are out of the market until TLT later crosses above its 15-day moving average. What are SPY and TLT? SPY is the ETF that tracks the S&P 500 and TLT is the ETF that tracks U.S. 20-year Treasury bonds. When TLT goes down in price, the interest rates go up and vice versa. We're excited to share with you the results of our backtesting. Our optimization test involved analyzing a range of moving averages from 5 days to 100 days in 5-day intervals, resulting in a total of 20 backtests. And here's what we found. The first column indicates the number of days in the moving average, and the subsequent columns show the trading outcomes for each specific number of days. But what's really significant is the third column, which displays the average gain per trade. What's interesting to note is that the averages listed in column 3 were consistently higher across all rows than any random period. This means that almost all of the gains in S&P 500 came when TLT was above its average. We're thrilled to share these findings with you, and we hope this information helps you make more informed decisions when it comes to your investments. Now, let's look at a specific backtest. We chose the 15-day moving average. This is how the equity curve looks like from 2003. As you can see, SPY's performance is strong. SPY increased 9.8% annually in this period, and our strategy returned slightly less at 8.85% annually, despite being invested just 54% of the time. In our analysis, we conducted 365 trades, with an average gain of 0.51% per trade, an annual return of 8.85%, and a maximum drawdown of 31%. So we can conclude that stocks go up when bonds go up. Obviously, when we reverse the buy and sell signals, we observe much worse results. However, we've covered that in another video called What Happens to Stocks When Bonds Go Down. Stay tuned. We stop here for today and hope you like and subscribe, and visit our website to find hundreds of other strategies for many other asset classes. Good luck trading.